All right, everybody. Hey, thanks for coming out, folks, to FNL's OODA Looping the charts. Try to set a plan for the day, set some levels, find our chop zone that we don't want to trade in. The goal here is not to predict where the market's going to go, but to have a plan for when the market goes there. So we want to be able to react. One key thing here, futures, trading futures or any product, any investment product contains risk, and only risk capital should be used. You can lose all your money trading futures, trading crypto, trading stocks, trading options, trading all that good stuff. So please use risk capital, develop a plan. And fortunately, FNL helps you with that plan and building a foundation. So if you want to take a screenshot of our disclaimer, I welcome you to do that. And why don't we get going with our daily chart, Travis, and start looking at the daily and then going through each time frame. And how are you doing this morning, Travis?
Pretty well, Rob. Thanks for asking. Had a good little session this morning. We get up pretty early on the East Coast. Well, we have some West Coasters who get up much earlier than I do on the East Coast, but early morning session went pretty well this morning. Started at 7:30, but I know some of y'all get up even earlier than that when you're out towards the west side of the country.
Yeah, I'm surprised how many people. We've got a few traders in here that get up crack of dawn and they're in session. So I do like these morning sessions, early sessions. It kind of gives you, gets you going for the market, right? I mean, I found when instead of just sitting down at my desk and like, okay, let's trade, if I can prep a little bit, and that's part of this OODA Loop process that we do with going through the charts. It kind of gets our mind in the right frame, get a sense of what the market's doing and help us get in our zone. So you can throw the disclaimer down if you want. We're good.
So quick glance at the 5-minute, little bit sideways over the morning. We were down overnight before then. So just short point of reference, market was down overnight, has broke into a little bit of sideways right here. Let's go catch up to the daily and see what we're looking at. So daily charts.
Ooh, look at that candle.
Got a lot going on right here, but interesting day yesterday. I can almost delete this white channel or make it not shown. It's okay. It's not too far in the way. Pay attention to the candles if you would. You can see how we had that big down channel retracement. We talked about that a little cleaner on the 4-hour. We had been holding that really, really well till a couple days ago. We broke out of that channel. Broke out, played around with this resistance level that was in early February. We did end up breaking through it, but then came back down through all the way back down to the support on the bottom yesterday. That was a long day.
That was. While we thought that the price, the tendency yesterday may want to go up, we didn't say the price was going to go up. We didn't predict that. We had a plan if it did. We also had a plan if it went short, and it went shorter, than we thought. I think that we had talked about if it was going to drop, that it would maybe do a 50% move on the price action from the previous 2 days. So we were looking at possibly doing something like, that. If it did, that would be a pretty natural move. Well, guess what, folks? It went all the way down to this bottom level, and it's holding at this bottom level right here that Travis has. So I think we're at a key spot to see if this gets back down in your channel today.
Agreed. That's what I was just thinking, is the channel's what really stands out to me right now. It might even be more obvious when we get to the 4-hour. But knowing that we were in that diamond lightning bolt pattern down, and when we broke out, the common temptation is to see us break out of the channel, come back down, and again, using that old line. So we're going to use what was resistance as support once we get through. So seeing these last two candles hit right up against that pink channel right there is pretty much the expectation created by breaking out of this channel and coming back to it. Very, very common to see the market pull back, use this channel as support to push up. So that would be a little bit of a bias right now if I had one, would be that we've been retesting this channel and wanting to push back up. Where to? Maybe to that February zone we've talked about a few different times, that even one day in the past week or so we respected so heavily it was almost unbelievable. So
yeah, and not just your channel, but also your level. You see the prices are respecting that level here in this area here. So we've got two areas now that we can say that, hey, if the price gets below that and gets back into your channel, then we're probably headed down. But if the price stays above this, we could be looking like Travis just said for a move up. Are we going to equal this candle today? Well, I don't know about that. that seems a little silly, but it could happen. But realistically, maybe a halfway move up, or if we get down in the channel, maybe the same halfway move down. Or, we could go sideways, but really, I think the price is going to want to do something. We've seen some pretty big candles recently, so I don't think the price is just going to sit around right here today.
Are we right back to where we were Monday?
Yep, we are right back to where we were Monday. Yep.
Perfect. Any other thoughts on the daily before we move?
Nope.
You can scrunch it a little bit to, again, re-show that early February level. I talked about it a second ago, so knowing that early February right there, bodies to wicks, was a really good level. We typed it into chat the other day, but if you're willing to draw bodies to wicks on the bottom side, we'll give you a great target of expectation when we get back to there.
Hey, Derek. Good morning.
Morning. How you doing?
Writing on.
I was just looking at Travis's channel that he drew, and how, it's funny how the blow off respected which is also the top of the channel, but you got a nice V there.
Yep. Very nice. Yeah, if you spread it out, you'll see even a little more.
Yeah. It's pretty cool. Now my things don't work.
Of course.
You see what I'm saying.
But yeah, I see what you're saying. Of course. Yeah.
He's looking at that angle and this one coming back to it.
Yep.
Perfect.
I like it.
Both of those were drawn. So from a 4-hour temptation, you can see why those are where they are. The white channel is the one that uses all of those as support, and then matched up the wicks on the top side. So showed me the same angle on both sides. Kind of trusted into the future. We'll see what happens. But that's the one Derek was just looking at, where the original channel had moved forward. The blow off of that channel is what we kind of just got close to. So exactly double the channel.
And that's pretty neat that's remember we drew those two different channels yesterday that we weren't really sure. We thought that, okay, if you drew this channel here early, it would look like this, right? It would look like that. And we said, okay, well, that doesn't really match up that great right now, but we're going to leave it on there to see if it comes into play a little bit later. We said that this channel, seemed to be a little bit more appropriate. Well, look what happened. This channel, actually, now the blow off has come into play.
Right.
Where we didn't think that this would actually be irrelevant, did we? Yesterday.
It's tough to say.
Yeah.
It's like it could be into the future, but that's where we wait and say, even though I have expectations created by channels, I just have to balance that with not only what is the market doing, but what is it doing when it hits the channel. I can't assume it's going to hold. So,
yep.
I like that. There's a few different reasons to think the direction we choose from where we're at seems to be a pretty big decision maker. We're really sideways overnight. If we push up, we're back above a support zone, as well as pushing up off of the old channel that says it should push up from there. Whereas if we pushed under all of this price action, it's the exact opposite picture, where we're back under the support zone that may be resistance. And we're also back inside the channel, like Rob was saying, might pick up that old tendency. So
what we're trying to do is just form a plan for when the price does something, it doesn't surprise us, right? I mean, we're just trying to build a plan, not predict where the price is going to go, but have a plan if it goes up, down, or sideways. If it goes sideways, then it's kind of a no trade type of scenario. So,
any other comments? 1 hour?
Yeah, let's go to the 1 hour.
1 hour it is. Very similar look. You'll see I have the same channels and key levels drawn. A little smaller price action to see on them. I could zoom in so you don't see as much of that channel, and we can see a little more current. One thing I like to point out is how we have retested that channel pretty strongly. So all you saw was really a wick on the daily, but now you see that it really is kind of fighting that area, especially from an hourly standpoint. So again, the temptation is, now that we're out of that channel, to pull back, use it as support, and then push forward.
Correct.
Nothing else to add. I'm probably just going to keep going.
Yeah. I mean, if we're just going sideways right now too. So, yeah, not a lot to talk about until this price wants to make a move. So we're going to find out today. I have a feeling it's going to make a move. It usually does. So.
Agreed. So we're on the 15-minute right now. It really shows the down move from yesterday, and then our sideways overnight. So
Yep.
That's really what I'm looking for as a trend right now, or what I'm looking at as the trend is I'd like to see a new low and a retracement. That'd be a good area to maybe look for a trade. But overall, this market doesn't scream to me that I just need to jump on it and get me all excited, if you will. I don't have a huge bias created. There's nothing that screams to me that I need to jump in a trade right now. So
Yeah, and if you Travis too, if you scrunch up your charts, you'll see a level that you could draw from there. See how it comes back here. That is just, you can see how this is just a big support level right here. So we're right in between those two levels. So in my opinion, if it breaks either of those two levels, that's going to tell me which way I need to trade. That's really all it boils down to for me, is if it breaks this level here and I can take this all the way back to here. If it breaks that, I'm looking short. If it breaks that area, I'm going long. And if it stays in this area, I'm probably not trading. I just want to, have a clear direction on which way to trade. I'm not looking to trade chop, especially on a Friday after I've had an okay week. I'm up a little bit this week, so I'm not looking to get chopped up today. Trying to have some, spectacular Friday, to try and run it up. I really want to be careful. Now, one of the things I do like, Capital Preservation Friday. Exactly. Now, here is one thing though. If this price does want to go up, what might we expect for the price to go up? So let's say that the price does want to go up, and I'm not predicting it's going to go up, but what levels might we look to trade to the upside? So it breaks that top level here, price comes up, breaks the top level here, makes a higher high. What might be a reasonable price that we think the price could go to? What do you think, Travis?
I like that next level, the one we just talked about, that level of support resistance from early February on the daily. So really, if I was specific, 44, 28, 29 area. But again, that level is from the daily. I'll go back and look at it just really, really quick. How early February, we had 4 days, bodies to wicks. I know I talked about it a second ago, so I won't spend too much time, but I really like that level. Created a really strong support level that was resistance, and then reconfirmed as we broke through, support again, resistance. So just really huge key level to me. The temptation being if we hit the bottom side, might see resistance. If we blew through it, we're also very likely to see resistance at the top side of that area, but both of those become targets for me, if you will. But definitely this bottom of that key level around 44.30, 44.28, 29 is a level that,
and that's about half of that body too, huh?
Agreed.
So that's going back 50%. And remember, we love to use the 50% number. So that's really going back about 50% of the body of the candle where most of the price action was. So that seems to make a lot of sense. So we can have a target on the top side. Now, you might want to keep it here for a second. What about a target on the bottom side if the price action decides to drop today? Because we know where we don't want to trade. We know what our chop zone is. What if the price decides to drop? Where might we look to, what levels might we look to trade today? Because our goal, remember, is to trade level to level.
Well, this 13 area is way down there. I'm trying to look back at really key levels. There's not a whole lot between us. I'm going to extend this to where we're at so we can see.
Yeah, back in, so if we go back to March 15th, we had 4 candles that just went up, up, up. You see that? 4 candles on March 15th that just went up, up, up. So in my opinion, if we can drop down back into our channel, we might look at seeing a nice little run down, maybe even over the next today, tomorrow, or Monday, Sunday night, Monday, because that's what Randy likes to call a gap period, to where there's no red candles in those. There they are right there, right here, right? So there's a chance. So we could actually reclaim those right there. And so I'm thinking a level might be, well, you have it actually drawn right there. There we go, level to level. So we'd be back down in your channel, and that might be a level to trade to, 4,300. That's a 77-point drop. I'm not saying that's all going to happen today, but, we might look at that if it gets back in that channel. There's not a lot to hold it until it gets back down to there. So that's just where I might be looking to trade to.
Right. I think that kind of lines up with the bottom of the channel too. If we did break back in, so I'd be looking for it. If it did hit the bottom, that's another barrier I see on that side. It's also common, I know we're on a daily chart right now, but it's common to see us ride the top of this channel till it
Yeah.
figures out whether it wants to run away or break in. So that also wouldn't be an uncommon look to see us use that channel as support, even if we don't go too far in either direction for the day. So a couple different tendencies I'm looking for there, but
Yep. So we've
off
kind of
to
got
the
our,
five.
yeah, we've got our chop zone now defined. We've got our levels on the top side and the bottom side. So really we've established what our trading plan is. Now we go to our 5-minute chart, our execution chart, and see how it looks on there.
Let's do it.
And here you can see our chop zone is really defined, isn't it? I mean, you can see right here, it's pretty, I mean, this is really gross drawing. Sorry for that gross drawing, folks, but that's really, it's pretty obvious there what it is.
Yeah, clean it up. Let's use a ninja tool. We'll use a rectangle here and we'll go from the very top to the very bottom of today. You got a color you want to use?
Yeah, it doesn't matter to me.
It's not green or orange because those are
Right.
my 1 hour and 30-second box. I have a few colors that I know what they are. So let's use purple.
Yeah, I
Just
like purple.
out of the ordinary. Opacity, we'll keep it light. 40 is pretty dark. 10's pretty light. So now we got a purple box that shows us more or less our chop zone. If we get out above it, we'll be looking for an uptrend. Get out below it, be looking for a downtrend. But as of right now, the trend's a little iffy. We're back and forth across the EMAs, again, at the club, if you will. But
yeah, and we're right in the middle of that box too. If you draw a line right through the middle of it, I'll bet we're right in the center as we speak. Imagine that at opening bell, we're right in the middle, stuck in the middle again, right?
Yeah,
that happens a lot. Yep. So we're pretty close to the middle. So let's talk about our stops going long and going short right now. Our position, our position is definitely better to go long. One, we've been coming down. So our stop, if we can clear that, if we count up 5, 1, 2, 3, 4, 5, we're right there. If we're going to use a 5-point stop to go long, if we're going to go short, where would we want to clear? Well, I got to clear that area right there, you know, at 43.81. So 1, 2, 3, 4, 5. I'd want to put a limit order in, probably short going there. Both ways, I have headroom for profit, so I'm not really concerned about the headroom as much. So that's when if we're just talking strictly position. I would say if we're talking strictly position, my bias probably is actually to go long here, hoping we get a turnaround here in the next 5 or 10 minutes to solidify going long.
Okay, so there's a couple different things I'm looking at. One thing I want to do is draw that key level on the bottom, same way you would from any chart, but bodies to wicks using the very bottom of this area, seeing as how we hit it pretty strongly. So that's going to give me a target on the bottom side to say if I want to get in, maybe I get in around really where we're at, 72, 75, 72, 50, right where it's retesting this area is likely to become support based on using a bodies to wicks temptation. Again, when I can line that up with the turnaround, I have more confidence that it will happen. This just gives me a target area to say, if it turns around right near this box on the top of it, it's likely to be a double tap in that area. Would be a great place to think about long. So if we see a green candle right here, that is a good sign that it wants to close and turn at that level. Something I would look for maybe is to have my stop up under that and then have a gain that fills before I'm back at that same area Rob was looking at. So I would want to fill that trade before I'm back at the 21, the 89, or at least be scaling out of that trade if I want to try and extend it, remembering that you are technically under all of the EMAs. So a few barriers in front of you. If I'm going short, I like the idea of actually getting in off this level, knowing that it used to be resistance, support level, 3 different EMAs there. Very common to see an EMA bounce. So to me, if I'm looking short, I want to get in right up against that level and then let it come back, pick me up, and then push down. So the 2 areas I'm looking to trade right now are defined by the boxes. I'll either be long at the bottom or short. Would say the top, but kind of the middle area. My stop won't quite clear the very top, but if we get a turnaround there, it's likely to turn around at the same key level. we'll see.
And we are getting a nice little turnaround here at the bottom. So
it's trying.
We're getting set up. We could be getting set up pretty nice here for a long.
But I have to keep in mind whether it's going to break this level or turn around here. It's likely that the first minute of that candle is green, just like we're seeing. Because of people who want to just FOMO and jump on and say, well, it has to turn around here. A lot of times the first minute or so of that candle shows a good bit of green. But we wait on confirmation of a turnaround, basically confirming the balance, not just of whatever orders were left over there. We want to see over 5 to 10 minutes, maybe even 10 to 15 minutes. Are there more buyers than sellers right here? Enough so that we could, again, close like you're seeing this green candle. If it closes as a green candle, now I've got an area that I already knew I wanted it to go up from here, but the market has come down, turned around, and is pointed in the direction I want to trade. Now that gives me a place to clear my stop, say, okay, now I've got to trade, as opposed to me assuming it's turning around there.
The one thing I like about this trade too, going long, is that if I'm wrong, fine, I'm wrong. I'm not here to try and win every trade. I'm here to make good decisions. And if I'm wrong, well, what's going to happen? It's going to break that key level. And now I can look for a move down, a pullback, and then a turnaround at a key level, which is right here, and look to go short. So if I'm wrong, I can really pivot and look to go short. So I don't mind, being stopped on a trade. You're not going to win all your trades. I think we all know that. Anybody who's traded for any length of time knows you're not going to win every trade. So if I'm going to be wrong, fine, let me be wrong and give me another direction and give me another trade to take pretty quickly too. So does anybody else have any comments on opening bell and kind of what trade they might be looking for?
Good to me because of we're right at 50%, which we're about to come up to.
Yeah.
Change things here in the next 10 minutes.
Yeah.
But this is kind of unusual. I mean, you were saying we're in the middle of the price action, but we're not in the middle of the most recent price action, which is kind of different for opening bell.
Well, we're in the middle of the whole price action from his
absolutely.
His big channel.
Right.
But yeah, we're at the bottom.
Swing. We're at the lower end of it, which.
Yeah, and if you look at the Bollingers, we're at the bottom of the Bollingers. We're at the bottom on the 2 sigma, so we're headed to the middle. So that's another reason why I think a long trade would probably be pretty good, because the price likes to go back to the middle, right? So if you want to throw on, do you have a chart with Bollingers, Travis?
I can throw them on real quick. I had to delete my whole other set. Remember yesterday how it was just freezing and flashing at me? What I ended up having to do was just delete the whole window of charts. So I've got my presenter charts. I do not have my good trading charts. I can add Bollingers real quick.
Yeah, just throw them in real
Bollingers, add, my favorite is the 220, so we can just do that real quick. Line, ... dash, while they keep them set up for me.
There you go.
Cool.
Maybe make that one, I don't know, whatever color you want, the middle. But as you can see, the price is going back to the middle now.
Yeah, what's interesting too, guys, is the top Bollinger's right at the 200 period on the 5 minute. So that top, once it touches that, if we can get above it, which is the defined top that we created at whatever time the recent high, 3 o'clock
93
in the morning.
Yeah.
Yep, right there.
93. So as you can see, we're at the bottom of the Bollinger right now. Here's the bottom of the Bollinger, headed to the middle. Here's his middle. Is this yellow, I believe? Is that it?
No, my midline is a horizontal line. It literally painted a horizontal line instead of keeping. I thought it meant it would use horizontal lines as the midline. You see what it did?
Yeah, I see what it did. Yeah,
it painted a horizontal line.
Huh.
Yeah,
I've never seen that.
Back to dots.
I've
We're
never
good.
seen that.
I don't know why they're so big. We'll just go skinny.
Yeah, it should be. Yeah, it should be dash style.
Just wish you'd have saved this move for 10 minutes.
Yeah, it's coming. It's coming a little early, isn't it? Well, that's welcome to opening bell, folks. It typically does not give us a great spot. It kind of puts us in a precarious situation of, well, I could go short. Well, I could go long. So
sorry.
I think we're still in an okay spot, though, honestly, to go long here. I can still clear my stop.
I like the idea of long from that same key level down at the bottom, 73, 74. As long as we cleared that boxy area, that support double tap area, then I think that's as safe as we need to be. Specifically, if I can get my stop around 69. So let's see.
Yeah, I think an entry at 76 with a 5-point stop is fine. If it breaks 76, even 75 would be better, like going long. So a limit order at 75 with a 5-point stop. Now that puts me at 1, 2, 3, 4, 5. So my stop's going to be at 70. I don't quite clear the wick back at 635, but pretty close. And then obviously I've got a lot of room above me, so to go up. So I'm going to be putting a limit order in, and if the price decides to take off without me, it takes off without me. Oh well. Now then I'll reset myself and I'll look at the opening bell, 30-second opening range, and start playing that game. Wow, we're 3 minutes early this morning, Travis. Great job going through the charts today. I don't feel rushed today, right?
Yeah.
Trying to get in our opening bell trade.
So that's what I'm thinking. I mean, it's the morning. I could almost set 2 trades here, but showing how much support's on the bottom side. I like long from the bottom. I like short from 81 area. I mean, both of them seem pretty acceptable. 81's where all the EMAs are, so it's a tough area to really be set on one direction. As much as I like to be, it's a tough one to me. I'm going to leave my long order, say if we get down to about 74, then.
Yeah, I'm going to do 75, do a limit order at 75, see if this will come back down here at opening bell, grab me. And if it doesn't grab me, it doesn't grab me. I'm okay with that. You know, if it decides to move up, I want to pick my price that I get in at. If I get in at 78, well, my stop is going to be 1, 2, 3, 4 is in recent price action. I'm not clearing that turnaround there, the red candle before the diamond. I'm not clearing that. So I need to get in at my price, not what the market is telling me it wants me to get in at. And if somebody does say they want to go short, I get that too. I don't have a problem with somebody going short here. Just know what stop you're trying to clear. You know, honestly, a good stop to maybe possibly clear is the reopen or the close from last night, and that's at 85.75. So if you can get in around 80, 81, then you could clear that reopen. I don't think you're going to be able to get all the way up to 91.5. That's going to be a pretty tough ask. But if you could get above the close from yesterday, which is at 85.75, that might be an okay stop if you want to go short. So we really want to try and build our trade around our stop. So find out where you want your stop, what risk management strategy you want to use, and then look for your entry point based on where your stop's going to be. That's helped me a lot too, honestly. That has really helped me a lot. Help me. Where should I enter this trade? If Rob says, well, you know, pick your price. It's your trade. You pick your price. Well, how do I do that? Well, where do you want your stop and what risk management is acceptable for you for the situation? Start with your stop. If you're going long, you know, count up however much. There's your entry. If you're going short, start with your stop. Count down. There's your entry, whatever you want your stop to be. So here we go. We'll see if we get in this trade.
So another way of looking at that is to say, if I don't have an area that the market can't go, not can't, but I want to look at the market and know where a stop would be safe and have reason to believe, okay, the market can't go there because X, Y, and Z. Okay, we're in this trade. We got picked up.
Yep.
I'm in at 74. My first sell will be 5 points up at 79. So we'll see here. This one seems pretty emotional. Looks like I could have left it right on the quarter tick of where the key level was, but so be it. As long as my stop is out the bottom of said key level, which there we are.
And I'm just doing a straight 2 contract, 6.5. So a 6-point gain and a 5-point stop. I'm not trying to ask for too much here. I really just want to get out of this trade and you know, move on with the next plan, which is our 30-second range. So when we have that, whoever has that,
71.75 to 77.25.
Okay, so 71.75 to 77.25. 0.25. So that's the first 30 seconds the market was open. The US market opened. So that's determining our opening range. So now I'm going to look to trade that after this opening bell, and I've got a trade actually for that. So I'm going to look for this to break out the top, and that would be the ideal situation here. It breaks out the top.
Yeah, we had one small chop out the bottom, so now
Yep.
we're going out the top. Maybe.
Maybe. Maybe, right?
Mm-hmm.
Sure tried.
Yep.
Here we go. Every time it starts to wake up, you feel good. It's funny how much of a roller coaster trading can be sometimes. You watch every
100.
quarter tick of the candle.
Oh, you bet. You bet. And so I did get knocked out of my opening bell trade. No, wait. No, I didn't. Hold on.
Well,
I went to
a
my
little choppy. Yeah.
Yeah.
Yesterday
No,
wasn't
I'm
much
still in it.
choppy, but
I'm still in it. I'm still in it. I went to my other account to do the opening range trade. So I am not putting one in through the bottom yet. I suppose I probably should. I just have one through the top.
yeah, we just wicked out a tick to both sides.
There we go.
It's not unusual.
Yep. Now we're in our opening range trade, going out the top. So I've got a fork. Oh, just got stopped out of that one. So we might get chopped up a little bit here. Boy, it just got me in, then stopped me out.
It's happened 3 times already.
Has it? Yeah.
Mhm.
I just did it once so far. So market's really trying to find a direction right now. Has not been able to really find it yet.
My fill's at 79. It keeps getting up there and running away from it. There we go. So 3 out of 4 contracts are out now at 5.
Nice.
I feel the
Excellent.
same way as Rob. We didn't have a super trend today, not one I'm chasing too much on. I might even take my last contract here. I'm actually going to do that today. 5, 5, and 4.5. So we're not trying to do too much with this range today. Part of the reason being the bias isn't strong. Some days the bigger charts show you, oh, the market should go up or the market should go down. Today, I mean, if anything, we did say it might go up off that channel, but overall, we are looking at a huge sideways temptation that really the way I want to trade is the way it breaks out of this box. And we kind of talked about that earlier. So to me, trading it to halfway back through that box was the expectation created. Anything above that could have been icing on the cake. I could leave it up there, but really, having 2, 3 different EMAs right here, depending on how many you use, the 21, the 89, and the 10 are right in that area. Very common to see EMA bounces off the EMAs. So to me, it just not trying to do too much. Taking the 5 points from a 4-point risk was a confident decision for me.
Yeah, I like it. I came within 1/4 point of filling me at 81. So we'll see if we can get there 1/2 point. So we'll see if we can get back up there and fill for 6 for me.
That'd be nice.
Yeah.
And I like that trade too. But again, a lot of times what you'll see is I'll have 2 contracts at 4 or 5, and then I'll have 1 contract at like 10 points, and then the other will be a runner up top. But today is a day that I just didn't want to do too much with a market that was hitting a lot of key levels right in front of us. So knowing that it was, we talked about this a little bit yesterday from a risk management standpoint, I have to prove to myself that going for those bigger gains can be more consistent than just taking my original 4-3, 5-4, 6-4, whatever your risk management might be from a smaller basis. And this is one of those situations that the advantage didn't scream to me that the market should be up here. Mm-hmm. It told me that from where we're at, we'd go key level to key level, exactly what we talked about. And in hindsight, that's exactly what happened. We went from the bottom to the next key level up top and have since turned around. Yep. So it's a good case of if you tried to do too much, then you might have either scaled out a little bit and not made it too far. But overall, I like my decision in hindsight too.
Yeah, it got me. So got me on my stop. Came within 1/2 point of filling and stopped me out. So
awesome. Still a good trade.
Yeah, it's how it goes sometimes, and I'm still happy with the decision. I'm not worried about trying to win every trade over the long term.
On the bottom.
What's that pay line on the bottom? So we did go through the 30-second range on the bottom and hit the pay line.
First one we hit.
All right. So I'm going to do that trade too, going through the bottom, see if we can retest. So now what I'll be looking for is a trade to retest the bottom of that opening range. So the bottom of the opening range is 71.75. which we're at now, but I need to close below that, come back to the bottom of the opening range, retest it, and then look for indecision confirmation of a turnaround. So now look at this price action. This is just
Yeah, we made a new low.
we
showed
did.
A double bar off the 21. Madeline said she had a limit order at 80.25 to go short. The market came back exactly to 80.25.
Wow, beautiful.
But
didn't get her in.
No, she said it would have picked her up, so she removed it. And her question is, how long after OB before you remove your limit order on the OB trade? It was still during that 5-minute candle. Do you have an answer for that, Rob? Or
no, because every OB is different. Typically I like 10 minutes. If you're gonna say, put a number on it, I say 2 5-minute candles is fine. But when we're talking about OB, there's a lot more emotion. So I just kind of have to gauge what the price is doing, I think, and decide, is this swinging enough to where if it grabs my order, it's not going to continue to go through, or is it swinging enough back and forth where it can grab my order and go back down again? So that's pretty tough at OB. I tend to leave. I would say though 5 minutes, 5-10 minutes is okay. But it's situationally aware. I can't say that.
And very good question too, because I know that's something that you're not the only one asking that question. That's something me and Rob still have to think about. It's not that anyone surpasses that level of, do I cancel my limit order or leave it here?
Yeah.
So.
Well, guys, it's kind of like, when you enter a trade and you have a risk defined, right? And you're saying, hey, I'm willing to make this much or lose this much right at this time.
Yeah.
So, you think about it and you're like, okay, was it a good spot right at 9:30? And like Rob said, maybe if it's zooming up, okay, you don't put it back on, you might adjust it. Mm-hmm. But if your risk, if everything that you analyzed at the start is still in the zone that you want, don't change it. And for 10 minutes, I agree with Rob. 10 minutes.
10 minutes is kind of my like quasi, default, I guess you would call it. But that does change. I don't want to say that it's always 10 minutes. So there we go. We broke down through the level. And if you look on this candlestick, can anybody tell me something about this candlestick that stands out?
Has no wick.
Thank you. No wick at all, folks. This price and this candle has not gone up even a quarter point. So we have not had it go up green at all. So now we're in our opening range trade going short.
A little choppy.
Yeah, a little choppy. So GLGLS.
But picked a direction. Do we have a key level that it could bounce off of?
I just got my first pay line.
All right.
So since I'm in a trade, Travis, I'll go ahead and share my chart. Yeah. Let me pull it up here.
There's second one.
There's a second. Yeah, I got my second too. So why don't you put yours down, Trav? So we can make sure that, there we go. Here we go. We're going for our third one. So what I'm going to do, folks, is I'm going to move this down to a point positive. So there's no way I can lose on this trade. So in this trade now, we got stopped out one time on the top. So we did a 2-point stop at 4 contracts. So our first trade, we were -8. This trade now, we are +4. Oops. We're +4. We're +8. And we just hit our +12. So now we're looking for +16 down here. This will be a 16-point trade if that comes to fruition. So these two cancel each other out. So 12 and 4 is worth +16 on this trade right now. Remember our first trade, we got stopped out going out the top. You can see it right here. We got stopped out going out the top. Now this one we filled on 4, 8, 12. And if this goes down here, we make 16. Now, what I'm looking for on my other account is I want the price to come back up here. This is a key level. You can see it here, right where my entry is actually. And then I'll look for a confirmation of a turnaround. So a double bar, a diamond, something that allows me that says, yes, the price wants to turn around after it pulls back. What I don't want to do is just jump on the trade right now. I don't want to jump on the trade because price likes to go back to where it's come from. So I have to have a plan. My plan is for it to come back up. And this is exactly what we did last night, Travis, isn't it? I mean, it's the same trade basically.
Yeah, looking for a turnaround off the 21. We need a pullback at this point, but the last one we had a turnaround off the 21 EMA, and it's hard to clear your stop from the entry of that candle, but we do have a really good turnaround signal at the 21 and 89 with a shallow retracement, so you could have made a good case for going short in that area. We're really close to opening bell for me, but absolutely, if we get a pullback here, I'd love to see it pull back, maybe right to where that support was on the morning, and then that push down. So that'll be the picture perfect situation if it happens. But we have now made a pretty solid lower low. So it's not a trend per se yet, but if it pulls back, shows a turnaround in a good area back here, then I'll be looking for a trade short for sure.
Yep. So that trade came to fruition, folks. So we had a +4, +8, +12, +16. These four add up to 40 points. At one contract, we started off with a four contract trade and we scaled out. So we ended up with what? Our -8 and +8 cancel each other out. So 16 and 16, right, is 32. Not a bad way to start the day. You know, for a lot of people, that might be a whole week of trading for them. Not too shabby. So that's the opening range trade that we're working on. We're going to have a blog out, I would say, in the next probably 2 to 3 weeks. Randy and you and I need to get together. It's long. You did a great job on it, brother.
Oh, I know. Yeah, we might have to break it up into several.
Yeah, a couple of parts. Yeah,
summarize what we're going to go over, and then
you did a phenomenal job on it. So we're going to work on that. And folks, what I would recommend you do as well. Let me pull up something here. You probably got an email, hopefully. You go to the website. Go to the member site and click on blog or the .com site, and you'll see here's part 2 of here's part 1, part 2, transferring levels to an execution chart and taking the trade part 2. So I would go ahead and go through this and take your time, folks. It's got a lot of info in here. Take your time. Okay. You might have to read it 2 or 3 times. There's a lot of info in it, but what we're trying to do is help you identify levels and how do I trade those levels? How do I actually use these levels to my advantage? You got anything to say about that, Travis? Since you did the blog?
Yeah, big thing, take your time. I tried to put a few different examples in there, but the biggest thing is looking at key levels, how you might trade them not only with the trend or against the trend at times, how to trust those key levels, and specifically how to identify a turnaround at that key level, but how to use those levels in conjunction with what you already know. I know how to look for a trend in a retracement, and a lot of people assume that key levels are a one-size-fits-all of either the levels at the top and I have to go up to hit it and then turn around, or the levels at the very bottom, and when I hit it, I have to turn around. More or less, the most common misconception is that you have to trade levels against the trend. And this article goes into a couple examples of doing that, but also examples of seeing the market break through, come back and retest a key level in the direction of the trend, which is what we would be looking for this morning. And I know that's a very overlooked strategy on the market that has helped me tremendously.
Yeah.
Lining up key levels with the trend and retracement, turnaround, clear stop I'm already looking for.
Yep. So I'm gonna stop sharing. Why don't you share your screen, Travis, real quick, and you can kind of maybe go through what we're looking for right now and what key level we're looking for to look for our turnaround, to look to get in a trade going short. So, I mean, obviously we're looking short, folks. We're not looking long. There's a lot of room below us. There's no reason to look long right now.
So if I'm looking at this market, a perfect situation would be a retracement back up to where we had support could become resistance. So what that might look like if I was a poor artist, you might see green candles on their way up, and eventually we're going to hit this level. I do not want to get in on that green candle that hits this level, because it doesn't tell me that there's not going to be another green and another green. Now, some people might have a track record there, but what we want to build as a foundation is, again, confirming that turnaround. So if we get back to that level and then I see something like either double bar, in this case it might be a diamond if your wicks are the right way, But now I've got a red candle that shows me at the place I wanted the market to turn, it has come back and now showed me it's turning around. That is the entry signal right there to say after this pink candle, red candle, blue candle, whatever color it is on your charts,
The
pull
down
the trigger.
candle.
The down candle, exactly. Once
Yeah.
it closes, it confirms that turnaround from your key level. So at that point, that's your green light to get into the trade. You could either take it at the close of the candle if your stop's clear, or maybe you decide, I like how the trade's set up, but I don't like where my stop is. So one thing we like to share is set a limit order where your stop clears or back where you're comfortable with the price. Now, again, there are some trades that aren't perfect the way they sit, but they're worth taking. So if you pass up on getting in at the close of this double bar, you're more or less telling yourself, I'm willing to miss this trade in order to get better position at my limit order. And if it ran off without me, I would not regret it because I knew I needed a safer stop for that trade. There are some trades that your stop might be pretty close to safe, but maybe not entirely clear, and you decide, this is a really good trend and turnaround spot. I'm taking it at the close of the double bar anyway because my stop's right at that top wick, and I deem this trade worthy. I'm not willing to let it go off without me. So to each their own, if you will, at that point. But again, what we're looking for is confirmation of a turnaround at that key level. And
excellent. Well said. Well said.
We had a good spot last night. You want to show them where you and a couple others?
Yeah, real quick too. Why don't you run your fib from your fib tool from, up here so we can see what a retracement, because remember we look for 30 to 70% retracement.
Yeah, let's do that.
Yeah, just so people can kind of see where they would like to have that.
So remember, the purple box is the one we're breaking out of. We could redo another box here. And this is literally just going to be a 30 to 70% retracement. So I look around 30, roughly this area, 70, roughly that area.
Look at that. So your 70 is right at your 60, 618 is right at your key level too.
Right. That 618 to 70% is right where we want it to turn. Agreed.
Yep. Yeah, that's beautiful. Yep.
Let's change this box to something so it's easier to reference.
And when we have a grind up, not a big move down like this, but when we have a grind up or a grind down, that's when that 30% starts coming into play a little bit more. When I have a big move down, a lot of times when we have a big move down, what happens? We get a big move back up. So I kind of want to wait for this to come back up to 50 to 618% before I really want to make a move here going short. And that might be contrary to what some people say. Some people may say, well, on a big move like that, you just take what you can get on a pullback. I get that. I totally get that. But for me, that's too much risk. Now, if I have a dollar cost average strategy, then I'll reduce my risk. If I'm a 10 contract trader, maybe I do it at 2 contracts at 30%. I have another order in at 50% at 2 contracts. And now I'm in at 4 contracts. Then I have another order in at 618 for 2 more contracts. So now I'm still only trading 6 of my 10 contracts. But again, if I'm just going to trade my full contracts or a percentage of them, I really want to wait for that little deeper retracement to help clear my stop.
I agree, Rob. I'm on your side of the fence there. With some people see that aggressive downtrend and think, well, it might only make short retracements. And to me, I like the deeper one as well. It goes back to the example me and Titus talked about on session the other day, where we talked about, you were there as well, talked about the trend versus that rubber band wanting to go back where it comes from concept of the market, right? And when we're in a good trend with a good retracement, it gives me a trend, but it also gives me a deep enough retracement that if the market wants to zoom right back where it came from, it's likely to pull down based on the last retracement up. However, if you get the market similar to what you were talking about, really steep downtrend with a little tiny retracement at the bottom, you could make a case that there's headroom. But if I think about the market wanting to go back where it just came from, there's still a strong tendency of it wanting to pull back to where it was earlier, right? If that was a rubber band, it feels like it's overstretched to the bottom side rather than giving a good trend. So to me, I like the common average trend a little more than the one that looks like it's running off without you at times, because the common one gives me a good entry point that tends to not be as scary. Whereas if you're getting in at the bottom of the mark after a strong emotional move down, it's almost like that rubber band still stretched to the bottom side. Now, an aggressive trend might keep stretching it, but the market's showing me it's due for a pullback if I have a shallow retracement at the bottom of the mark.
So I read something yesterday that I had already known, but it was kind of reaffirmed that the big moves that we have, like we had yesterday with really no pullbacks, whether it's down or up, long or short, those only happen 15% of the time, 15 trading days, 15% of the trading days out of the year. So if that only happens 15% of the time, do I really want to sacrifice my foundation and what I do well for 15%? That seems pretty low. Seems pretty low. It doesn't happen a lot. It's kind of, Randy and I talked about this yesterday, that it's kind of an anomaly, an outlier.
Yeah, if you happen to
type of
get
day.
in and can ride it, fine. But yeah, otherwise it's tough. Yeah.
Yeah, it's pretty tough. It's pretty tough. So yeah, why don't we go back to that trade from last night at 2000, around 2000 or so. We want to show, I mean, we were in session. We literally talked about this, Ladine and I, and I think who else was in last night? Robin, Jim V, Richard Dearman was in. We had a bunch of people in last night, Crystal, and we literally walked everybody through this trade before it happened. That was the real neat part. Before this trade happened, we had this key level drawn, and we said if it came back to here, and we're not trying to brag or say, look what we did. We're trying to show that we had a plan, and we collaborated as a group. We didn't trade call. We collaborated as a group of traders and said, hey, if it does this, we need to get in this trade, because if we're not taking this trade, what trade are we going to take?
And which one could have been either one of them, but
it could have been either one, but it was the first one at, let me grab it here. It was at
maybe you mark it
2010, basically 2010.
Yeah. So the one that is on the screen basically with the
the one that you have. Yep.
So took the same one last night looking at it. We had, and this is when I was not on session with them when I took this trade, but I asked Rob, he's like, yeah, I'm in the same one. Sent me a picture. It's like, that's awesome. And it was because we had a down move. It was riding on the 21 in a downtrend. We're under the 89, under the 200, and have been pretty strong down before this. So a lot of people are thinking down overall. And then when we came back, we showed, again, slight trend, not super strong, but then you had a double bar right off the 21 that if you took that one, cool, you didn't have to, but now you had a little better retracement, and same thing, double bar off the 21. So we were just talking about confirmation of a turnaround from a key level. In this case, you had just that, where we had your green up and red down off the 21. There's your indicator that says, I like this trade. With a clear stop, let's get in it. And you'll see that I took it as that candle closed at the same area. And mine was a 4-3 to the short side. So that was right at or less than a 5-minute trade during that candle. Just perfect entry signal, turned around, 4-3 short.
So in this scenario too, for me, I needed confirmation that the price was going to go down. So we made the lower low. Then when it pulled back, remember, what is it, 30 to 70%? Well, it pulled back to a 618, turned around right at your key level, at the bottom of your key level, which was I have the same level. That's what told me, hey, wow, what a great spot. Because back here, didn't like it as much because we never made a lower low. As soon as we made that lower low, that's what gave me confidence. And for me, it was a 2-contract trade where I got out of my first contract at 6 points, and I got out of my second one at 12. So worked out pretty well. Worked out pretty well. Yep. So that was that trade, folks. So I think with that, we're going to end the YouTube live stream. Thanks everybody for coming out. We'll be doing Sim Millions here in about 5 minutes. So everybody have a wonderful weekend. Travis, great job this week. Everybody else that contributed, thanks so much. You know, FNL is all about traders sharing and collaborating. We don't have any gurus here. We just have a lot of really great people that help each other share and collaborate and get better at their trading. So thanks a lot, Travis.
Yeah, thank you too, Rob. And thanks for having me. And thanks to all our members for hanging out. Any new YouTube arrivals that may be out there as well, welcome. We're glad to have you around. Our goal is to share a lot of what we've been doing to help our own members, to help others out in the world as well.